Look at this number, $315 trillion. This is the total amount of debt held by the entire world today. To put that in perspective, if you added up the value of every car, every house, every iPhone, and every factory on Earth, the total global economy, it is only worth about $100 trillion. We owe 3 times more than we actually produce. Now ask yourself the most important question in modern history. If every nation on Earth is in debt, who are we actually borrowing from? The United States owes $34 trillion. China owes nearly $10 trillion in government debt. Japan, the UK, Germany, everyone is in the red. If we are all borrowing, where did the money come from? Did we borrow it from Mars? The answer is much more disturbing. The money isn't owed to a person or a place. It is owed to a system that was not created by accident. It was carefully engineered by 4 men across 3 centuries to ensure that debt is never, ever repaid. In our modern world, debt is not a problem to be solved. Debt is the very foundation of how our world functions. It is a trap designed to keep countries, and you, paying rent on existence forever. Tonight, we look at the architects of the engineered debt trap. Our story begins in a dark, cold room in London in 1694. King William III of England is in a desperate situation. He is fighting a massive war with France, and he has run out of money. Traditionally, kings borrowed money from wealthy people and paid it back after the war. But William's credit was terrible. No one wanted to lend to him because they didn't think he could pay it back. Enter William Patterson, a Scottish trader with a radical, almost evil idea. Patterson approached the king with a deal. He said, "I will gather a group of wealthy lenders to give you £1.2 million right now." The king was thrilled, but he asked, "How will I ever pay you back?" Patterson's answer changed the world. "You don't have to." Patterson proposed that the government would never have to pay back the principal, the original amount borrowed. Instead, the government would pay 8% interest every year forever. To guarantee this payment, the king gave Patterson's group something more valuable than gold: the power to tax the citizens. This was the birth of the Bank of England. Before Patterson, debt was a burden you tried to get rid of. After Patterson, debt became a permanent stream of income for lenders. This created a template that every modern country uses today. The government spends money it doesn't have. The bank creates IOUs, bonds, and the taxpayers spend their whole lives working to pay the interest on those IOUs. For the first time in history, debt became a permanent part of the government. If William Patterson invented the engine of debt, Nathan Rothschild built the highway that took it across the whole world. By the early 1800s, the Rothschild family had built a massive banking network across 5 European cities: London, Paris, Frankfurt, Vienna, and Naples. They were faster and better informed than any government. The most famous example of Rothschild's power happened in 1815, during the Battle of Waterloo. This was the final battle between England and Napoleon's France. The future of the British economy depended on the result. Nathan Rothschild had a secret network of messengers and carrier pigeons. He found out that England had won the battle a full day before the government did. Instead of telling everyone the good news, Rothschild did something genius and cruel. He began selling his British stocks and bonds. When other traders saw Rothschild selling, they panicked. They thought, "Rothschild knows something we don't. England must have lost." The market crashed. The value of British debt dropped to almost nothing. At the last second, Rothschild's agents stepped in and bought the entire market for pennies. When the official news arrived that England had won, the value of those bonds skyrocketed. In one day, Rothschild didn't just get rich. He became the owner of the British government's debt. Rothschild's innovation was internationalized debt. He made it so that countries didn't just owe money to their own people. They owed it to a global network of banks. He made debt tradable. This meant that if a country like Spain went broke, it would hurt banks in London and Paris too. This sounds bad, but it was actually a trap. Because everything was interconnected, governments felt they could not let the system fail. They would do anything, raise taxes, cut services, or borrow more money, just to keep the interest flowing to the global web. The web was now so big that no country could escape it without crashing the whole world. By the early 1900s, there was a problem. In America, the amount of money you could print was limited by how much gold the government had in its vaults. If the government wanted to borrow more money to build roads or fight wars, it couldn't, because there wasn't enough gold to back that new money. This was a cap on debt. The bankers wanted to remove that cap. In 1910, a group of the world's most powerful bankers, including associates of the legendary J.P. Morgan, traveled in a private train car to a secret location, Jekyll Island. They even used fake names so the public wouldn't know who they were. Their goal? To design a central bank for the United States. They knew the American people hated the idea of a banker's bank, so they gave it a boring, safe-sounding name, the Federal Reserve System. When the Federal Reserve was created in 1913, it gave the system a superpower. Here is how it works. The government wants to spend $1 billion it doesn't have. The government prints a piece of paper called a bond, an IOU. The Federal Reserve buys that bond, but with what money? The Fed simply types the numbers into a computer. They create the money out of thin air to buy the government's debt. This is the ultimate hack. It ensures there is always a buyer for government debt. The government can borrow an infinite amount of money because the Fed can print an infinite amount of money to lend to them. This is why the U.S. debt is now over $34 trillion. Without J.P. Morgan's Federal Reserve System, the market would have stopped lending to the government years ago. But because the system can create money to buy its own debt, the trap can grow forever, or at least until the currency loses all its value. So far, we've seen how debt was invented, how it went global, and how it became infinite. But how is debt used as a weapon? For that, we look to Paul Volcker, the chairman of the Federal Reserve in the late 1970s and early 80s. In 1979, the U.S. was suffering from high inflation. To stop it, Volcker did something extreme. He raised interest rates to 20%. In America, this caused a recession. But in the developing world, countries like Mexico, Brazil, and Argentina, it was a disaster. These countries had borrowed billions of dollars from Western banks to build their infrastructure. The loans were in U.S. dollars. When Volcker raised the rates, the cost of those loans exploded. Suddenly, these countries couldn't even pay the interest, let alone the original loan. They were trapped. This is where the trap became a tool of control. The International Monetary Fund, IMF, and the World Bank stepped in to help. But this help came with strings attached. These were called structural adjustment programs. The IMF told these countries, "We will give you a new loan to pay off your old interest, but in exchange, you must sell your water and electricity companies to private corporations, cut spending on schools and hospitals, lower wages for your workers, export your gold, oil, and crops to the West for cheap." Paul Volcker's interest rate hike turned debt into a leash. Nations were no longer truly independent. They became debt slaves, forced to run their entire countries just to make sure interest payments kept flowing upward to the big banks in New York and London. Debt wasn't just about money anymore, it was about power. We have reached the final part of our journey. We see the $315 trillion, we see the four architects. But why don't we just stop? Why don't we just pay it off? The answer is the most shocking part of the entire trap. Today, the U.S. government spends over $1 trillion every year just on interest. That is more than it spends on its entire military. Where does that $1 trillion go? It goes to the people who hold the debt. Big banks, wealthy investors, and massive asset managers like BlackRock or Vanguard. This is a massive wealth transfer. Every time you pay taxes, a huge portion of that money goes straight into the pockets of the people who manage the debt. You are working to pay the interest on a system you never agreed to join. But here is the reveal that most people never realize. If we actually paid off the debt, our economy would disappear. In our current system, money is debt. Almost every dollar in your pocket or your bank account was created because someone, somewhere, took out a loan. When a bank gives you a mortgage, they don't give you saved money. They create new money by creating a new debt. If every person and every country paid off every debt tomorrow, there would be no money left in circulation. The system cannot stop. It is like a bicycle that falls over if it stops moving. To keep the money supply growing, the debt must grow. We live in a world designed by Patterson, Rothschild, Morgan, and Volcker. It is a world where we don't really own anything. We pay interest on our houses, interest on our cars, and our governments pay interest on our future. We are living in a giant global apartment, and we are paying rent just to exist. The $315 trillion isn't a mistake. It is the goal. The debt trap wasn't built to be escaped. It was built to be inhabited. The question is no longer, how do we pay it back? The question is, how long can a system built on infinite debt survive in a world with finite resources? That is a question the architects didn't want us to ask.